Good morning. This is Josh Hayes, and here's today's market monitor. It's hard to be optimistic after 5 straight days of losses, but there actually are some glimmers of hope. We've obviously fallen low enough with price to be competitive again, and that we'll definitely be able to illustrate that more here in a minute. But the U.S. dollar is at a 3-year low, which certainly helps. So you got our current low prices to a very low value dollar, and you're likely to get more sales. We also probably should have already had more trade deals announced. Been wondering what the reason for that delay was, since we had one deal announced almost 2 months ago with the UK and nothing since. Well, it turns out the Trump administration is waiting for the big beautiful bill to pass the Senate before some of these other deals are finalized, even though it most certainly sounds like they could have been finalized already. I have to believe that um, announcing those deals would somehow change some minds in the Senate, or lead to calling for some changes in the bill itself. So they want to wait to announce these deals until after the passage of that bill. I have to believe there are some pretty large trade deals with agriculture in these deals. Sounds like we're close with India. Uh, China is all but finalized, and we're likely to get other big deals as well. Another aspect we've been watching in this morning broadcast each day is how Argentina is so much lower priced than the U.S., and how, as much as we came down, they just kept continuing to go down even further. Well, they're on an export tax vacation right now, and it's led to about a doubling of the sales pace of their farmers there to get this grain sold at a lower price, since there's not an export tax added onto it. Well, that's coming to an end, and it's expected that in July their sales pace is going to slow dramatically as this export tax goes back into effect. And we'll take a closer look at that here in a moment. Interesting to see that global wheat production forecasts are again on the rise. All we continue to hear about is how bad weather is in places like Russia, China, Canada, Western Europe for wheat. China, in spite of a very significant drought that is only now finally starting to see some relief, where damage has no doubt been done. A larger growing area has led to an increased forecast. So they're actually projected now to grow more wheat than last year, in spite of the weather issues they've had. And then, of course, we've got December corn testing in a contract low, and November beans slipping to a monthly low, with weather showing good precipitation July. The glimmer of hope there is that open interest has been rapidly sinking, and we're at the lowest level since the start of the year, meaning these long contracts that were betting on any kind of weather issue, they've pretty much given up on that at this point. There's not many open contracts out there still betting on the weather. So what does that mean? That doesn't mean anything that, necessarily the sentiment is getting in, but it just means that what's helped drive us down is starting to dissipate. There's just not many people left to sell off. It doesn't mean we can't go down lower, but that's been a big part of the reason we've been declining here lately. Is though when we get to weather forecasts clear through pollination, it's going to lead to anybody who was long betting on that to get out of those positions. And at this point, they, for the most part, they have. Taking a look at the weather, I say before I get into any of these that on the whole, global weather is really a non-issue right now. Everyone has minor things popping up here and there, but there is really no major area of concern. And certainly the most major issue is limited to smaller producing regions. And I'd have to say, out of this right here, the most severe issue right now is in the European Union, in Europe, Western Europe, Western countries are still dry. It is not impacting their production forecasts as yet. This is mostly affecting wheat areas, and yet, as a whole, even in Europe, the production numbers are on the increase, and certainly globally as well. And the United States here, projecting for a good mix of seasonal rains and sun into the beginning of July. Still the possibility that it could get a little bit hot and too dry in July, but it is not yet being called for on any wide scale. It's still being hinted at. Nothing to get excited about. In Canada, the southwestern prairies are getting relief from a dry spell, and in Brazil, it's too wet for wheat and maturing safrinha, but yet not enough of an issue yet to drive the markets. Here, I want to bring up these international cash prices for a third straight day. We just talked about what was behind Argentina's sell-off and what allowed them to sell for so low. And we've been seeing that no matter what happened with U.S. prices, no matter how low we got, we just kept staying at an arm's length distance away from what Argentina was selling for. And now we finally see their prices have finally started to rise. They were below 190 per metric ton yesterday or 2 days ago, and now they have risen back up above 190, almost to 191, while the U.S., that gap has narrowed below $2. This will be very helpful going forward. We finally reached a point where between these prices and the value of the dollar, we are once again an attractive option for the world. And that's what we saw a month ago, which led to some of our rallying, especially with wheat. And look there on the chart, you'll see that we've closed within 64 cents per metric ton of the Black Sea on wheat. So we should definitely see this bounce start to return. Argentina with soybeans still about $16 more or less than per metric ton than us. But again, with that export tax holiday ending, those prices should definitely be on the rise, and their sales should certainly slow here soon. So relief is in sight there. Taking a look at the overnight, up across the board. We were up across the board yesterday at this time as well, only to wind up closing the day in the red across the board. So nothing to get too excited yet. We need to see this carry on through the day. But the good news is we've kind of leveled off in the last 24 hours. Corn is actually up about 1 cent from this time yesterday. Soybeans are just about even, and wheat is only down about 4 cents. Looking ahead to Monday, in the massive planted acreage report, quarterly stocks update, we kind of, with corn, we kind of got to hope that the USDA keeps us close to where we were, and if so, hopefully we won't see too much negativity with corn. It's been a report that typically is bearish for corn and bullish for beans. I'd take neutral for both at this point, but just note that with soybeans, we've seen some pretty significant rallies in 2021 and 2023 with soybeans. Perhaps we could get that again here if there's a sizable decrease in soybean acres, but we're not exactly banking on it. So we'll talk more about it in our writings today, but we're almost just hoping for kind of a ho-hum report instead of a shocker, because the last thing this market needs is a shocker that would be negative. And if you take away from one crop and add to the other, it's hard to imagine that we'd have a shock in a good way for the whichever crop gets a bunch of acres added to it. Hopefully the market has counted in up to even 500,000 more acres of corn, but ideally the USDA would leave it mostly unchanged, which is where most of the forecasts are right now. That'll be all for today and all for this week. I hope everyone has a great weekend. We'll talk to you again on Monday ahead of the big report.